Okay, today's conference call is the 90% economy. It is, let me go to the, here we go. Highlights. Wall Street analysts, ever optimists, will claim that any increase in economic activity is a signal that everything is returning to normal. And you've seen this time and time again. Somebody's going to open, things are going to return to normal. It's going to be okay. But this is not an absolute game, it's a relative game. And I do want to emphasize this relative game as well too. And this even extends to what might be the new parlor game that we're playing right now, in that the most important voice in the financial markets today might be Anthony Fauci. Every time he comes out and talks positively about a vaccine, Moderna's going to phase 2 trials on their vaccine. This morning, markets jump on the assumption that, oh, we're going to get a vaccine, 300 million people are going to get a shot, and then it's going to be the summer of 2019 like nothing ever happened. That's really optimistic thinking as well, too. And the problem is a 90% recovery is still a bad recession. In 2008 to 2007 to 2009, GDP fell about 4% from its high. Early evidence suggests that the Chinese economy is still running at roughly 90% of its pre-virus levels. That's not a good one. And then I also want to talk about the stock bond correlation has gone random, is shifting from deflation mindset to an inflation mindset, and the stock market rally continues to look like a bear market, suggesting a reset is coming as well too. So let me dig into this a little bit here and talk about this in a couple of different ways. Bear with me one second here. Okay. The 90% economy. This was the cover of the Economist this week. I've really been highlighting this a lot because I think that this is really the important issue, especially now that 33 million people have filed for unemployment claims. 22 million are on continuing claims. A quick word about that real quick. It's looking like, interestingly, 5 million people went on the continuing claims this past week, but last week we only had 3 million in initial claims, showing you the lag that there is in reporting on continuing claims. I suspect that when all is said and done, if we have 33 million people that have filed for initial claims, we're probably going to get up to around something like 3 to 5 million less of that number. In other words, it's looking like the Paycheck Protection Plan. I know that Steve Mnuchin has said it's saved 30 million jobs. I'm sure he's got a metric that says that. But if you want to use the metric of how many people file for initial claims and how many people eventually within 3 weeks or so after they file for claims wind up in continuing claims, suggesting, especially with the economy still in free fall right now, they're getting called back because their company got a PPP loan. It's only about 3 to 5 million is what I think it's going to be right now. And that is part of this 90% economy story as well too. So let me talk about this in terms of what's happening in China. And I think it's important to understand what's happening in China. For weeks now, they have been reporting 0 cases. Now, the key word I just said is reporting 0 cases. They have been restarting their economy now for almost 6 weeks. They have been forcing people back to work. They bust them in. The police rounds up all the workers, puts them on a bus, and sends them to work. So if there's ever economy that is going to go right back to where it was pre-virus, it would be the Chinese economy. So what do we've got here? This is from the Economist 90% story. Traffic's in major ports has made it back to 100% of where it was pre-economy. Now keep in mind, and I'll bring this up a lot, there is a big seasonal effect in a lot of this data as well too. What you would expect the levels to be in May is not what you would have expected the levels to be in mid-January. So hotel occupancy in China is still down 1/3, and it's down 1/3 from the beginning of January. Now, you would expect that all things being equal, there's a seasonal effect in hotel